Hello traders, welcome back to my channel again. I'm Paper International. If you are just coming across this channel for the very first time, you are highly welcome, and do well by subscribing to this channel for more videos and explanation. And if you find this video helpful, please give it a thumbs up. Let us proceed into the video. On this video today, we are going to trade the candlestick patterns. We will trade by analyzing the candlesticks. As you can see on the screen, I have already taken some trades to show you that this strategy and yet easy to understand compared to ticks analysis. Each candlestick represents 1 minute. That is to say, one candlestick form an end or elapse within 1 minute time before moving to form the next candlesticks again. The candlesticks we are using is known as the Japanese candlestick. As you can see it on the screen there, this candlestick is known as the Japanese candlestick because it's easy to study, and I use the Japanese candlestick because it is easy to study and analyze. And we choose the time frame, which is the time our trade will expire. For me, I choose 5 minutes time frame, and this is synthetic indices. Take note, that is to say, into the system and is being monitored by the platform, although it is similar to Forex. And in our next video, we are going to be studying the candlestick patterns and their names, what each represents. We study them one after the other. So candlestick, like we are going to study candlesticks like the engulfing patterns, which is one of my favorite candlesticks. And we also have other candlesticks like the doji, which comprises of different types. We also have the hammer, the spinning top, the dark cloud, the piercing pattern, the evening star pattern or morning star. We have the shooting star, the harami, the marubozu, the marubozu spin, the marubozu, the 3 black crows, the 3 white soldiers, the frying pan buttons, and many more. We are going to talk about them in our next video. We will study them thoroughly so that we can understand, so that we can take trade on them very profitably. So on this trade, if you look at it, you will notice that it is a downtrend or a downward trend. Let us draw the line and see. I'll show you the line, the trend line. If you look at your screen very well, you will see that this chart is a downward trend. This is a downward chart. So like I said earlier, that our candlesticks is 1 minute and our trade expiry time frame is 5 minutes. So I am going to wait for my favorite candlestick patterns to form before I can take my trade or predict the next few candlesticks that is going to form. And some of these patterns include the engulfing patterns, similar to the harami or the tweezers, the tweezer patterns, and etc. There are other many more patterns too that are similar to that. So if you watch your screen very well, you will see that we have chosen 1 minute as our candlestick time frame, and then you can see that the engulfing pattern has formed. This is known as the bearish engulfing patterns. The one that formed now, you can see on the screen, is known as the bearish engulfing patterns. is telling you that the trade is still going down. So we are going to take our trade from here for down for the next 5 minutes, for the next 5 candlestick prediction. It's going to be down. The bearish engulfing patterns simply means the trend will still continue downward. Why? Maybe within few candlestick counts. So what is this engulfing patterns in the first place? An engulfing candlestick patterns are comprised of 2 bars on a price chart. They are used to indicate a market reversal. That is to say, they change the direction of a candle for just a short term or long position. The second candlestick will be much larger than the first one that formed, so that it completely covers or engulfs the length of the previous candlestick bar. Just like you have seen on the screen there, the blue and the red candlesticks there that formed before I enter my trade, they are engulfing patterns. They are used to indicate a market reversal. Since this one is a bearish engulfing patterns, it shows that the trend is still going down. Since we are on a downward trend, the trend is still going down, and that is why I enter the trade down. If it is a bullish engulfing patterns, then the trade will take a reversal, maybe up a bit. It will count some number of candlesticks upward for some time before continuing the downtrend. So we have, as you can see, I have taken my trade and I have explained what an engulfing pattern is. Like I said, we have different patterns that look similar or identical to the engulfing patterns, but we are all going to discuss that in our next video. In our next video, we'll talk about the patterns one after the other for a better understanding. So you can see that the trend continues to go down. The trend continues to go down. This is why I choose those engulfing or the harami. There are more other patterns that are my favorite, but still we'll talk about them in our next video. We will discuss all the candlestick patterns, their indication, what they indicate, what they represent, so that we will know much or more better about them. Then we'll continue to trade with them. At least I believe that it's more easier to understand than the tick analysis, the XZ method that we have been using. Many of you are going to find these patterns or this method more easier to understand than the ticks patterns that we have been using, or the XZ patterns or analysis that we have been using, because this is similar to forex trade. We just have few minutes to round up the trade. Our trade is about to expire. So my only advice I have for my student some of you new traders is this analysis, these patterns and analysis requires patience, since you are going to be predicting with at least a time frame longer than the ticks analysis that we have been using. So you are going to learn how to be patient. You are going to learn how to be persistent. so that you can learn. I found this more easier to understand than the ticks analysis, although, but since it takes time, you can see that I will have to use 5 minutes time frame for the trade to expire. As you can see on the screen, it's a one trade, like I said, but the time frame we use is longer than the usual analysis or patterns that we used to take our trade we normally use. So I have already taken some trades before now. If you watch your screen very well, I have already taken some trade before now. I just want to explain, or this is just like an introduction to candlestick patterns, because this is what we are going to be using for a while. We are going to be using this for a while. I want you guys to understand the candlestick patterns, because it is much easier if you study each candlestick or the patterns one after the other. If you understand it very well, trading in the binary or in the synthetic indices will not be that much hard for you anymore, since this one is much easier than the ticks analysis that we use on the synthetic indices. So I don't want to waste too much of your time. I think we have come to the end of the video for today, the trade for today, but I'm going to explain more better in our next video. Like I say, those candlesticks patterns, what each represents, when each one forms, so that you'll be able to recognize them whenever you see them on the trade, so that you can be more profitable in the market, in the synthetic market or in the forex market, since this is similar to the forex market. One requirement, the most requirement from this is patience. This strategy requires patience and discipline. So please, as a trader, if you really want to be successful, to become a good trader, you need patience, so that you can analyze very well. Best traders do, because this is one of the characteristics of a good trader. Patience is one of the characteristics of a good trader. So thank you very much for watching this video, and please subscribe if you have not subscribed, and if you find this video helpful, do not hesitate to give it a thumbs up. Till I come your way again in our next video.